Happy Friday, traders. It's 8:02 a.m. Chicago time, 9:02 Eastern on the 26th of May, 2017. Thanks for joining me. First and foremost, I want to remind everyone it is Like Friday. I would really appreciate it if you'd hit the like button, the thumbs up on your YouTube streaming screen. If this video is embedded somewhere, you can click on the YouTube icon at the bottom right or so to pull up the YouTube stream and to hit the like button. I'd appreciate it. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is neutral. The Bund is higher this morning, fairly okay, 42 ticks. Also, Japanese yen and gold. Gold is trading at 1,265, up $8.60. It is topping the list of commodities that I'm watching, up 0.68%. The laggard today is the Euro stocks and the DAX. There's a slight pull towards safety this morning in the way things are positioned. However, the U.S. equities are not down by far. The S&P at 1.5, the Nasdaq at 1, and Dow Jones down 8 points. The Russell's down 1.8 points. Overall, pretty even to slightly down. The news on the news front, there isn't all that much. More geopolitical issues. Trump took the Germans to the shed here during the meeting regarding automakers. He's saying that he will make moves to stop automakers from selling millions of cars in the U.S. Just more rattling there. Other than that, not much else to report there as far as news. Looking at what we're expecting today, my screen is not coming up. 1 second, please. All right. As far as what we're expecting today, looking at... Oh, this is incorrect. I don't have a very good read since the calendar that I use has not been updated. It looks like we have the 10 a.m. U.S. May final University of Michigan sentiment. That's at 10 a.m. this morning, and that's pretty much it. We already got the U.S. preliminary durable goods orders. Second reading on the analyzed GDP also about a half hour ago. And again, what's left is Michigan sentiment, okay? So that's how things are shaping up there. Let's take a look at what we expected yesterday versus what we got. So yesterday, the primary hypothesis was for a sideways trade, open auction out of range that starts to move slightly towards the prior day's range in a responsive selling pattern. Not much of it, though, and any expectation is we're likely to rotate up towards the overnight high of 24.1250 and then push to 24.15 or thereabouts. That's the next measured move high. That's the primary hypothesis. This is the hypothesis that did work out yesterday. We ended up playing this hypothesis. However, this hypothesis looks a lot like Hypo 3, which I'll go over. The difference was the nature of the run. Actually, if I look at it more closely, Hypo 3 is more of what happened. Hypo 3 showed that there was very little done to the downside, and then the main move being up, and the market pushes through up into the 24.18, 24.20 area, and that's around where we ended up going. This hypo is initiative, but with the move occurring early. So I do believe that Hypo 3 took the lead here. Hypo 2 was responsive. We're looking for the market to continue the overnight move. The overnight was really wound up to push through to new highs and then the expectation was for the market to become responsive and push back into the prior day's range, get down into the 2402 LVN, and then bounce back up and finish somewhere in the middle of that day's range. Yesterday, here's what actually happened. The market went sideways. We have somewhat of an open auction. That's why it's confusing between hypo 1 hypo 2. But the main move was up, and it occurred early with a continuation move taking us to 1650. Following that, we pull back to the mid. Here's the mid, the blue line. This blue line is the mid when I'm referring to mid. Pull back to the mid, consolidate, and then we ultimately pushed higher. Again, this was what we expected for hypo 3. There it is, a push up, pull back, and then push higher. So that's why I'm saying it is more likely the hypothesis that is in control. Why is that important? It's a more initiative hypothesis and covering more distance. Really, the reason I didn't extend the range on the upside, which could be up to 17 points on the upside on initiative buying, is because this has been trading in a way that makes it seem really exhausted. So yesterday, as the market was pushing up, I was looking for areas to get in long because we could not close this gap. We left a gap behind. No real pullbacks, but then as it starts to rotate right here, as it starts to consolidate and so on, we had a very weak high at this point. I knew that I expected with high probability that there's going to be a continuation higher, but I saw evidence that the market may start pushing back into the opening swing. It did not happen. We ended up with a mid trade instead, but the movement up was not so strong early on, after the early move. So that's how we responded yesterday. Looking at how it traded on the close, I found very important, very interesting. We have the strong 4.75 point rotation, given the rotations on the day, and then a small pullback almost exactly to the mid of this rotation. The mid is this little line right here, this little black line. That's the mid of this rotation. Pulls back to the mid and then ends up holding near the mid for the day inside of the IB. The expectation was for the market to continue to move lower, which is what it did in the overnight session, but it's starting to show signs of weakness. Now this is Friday, and we're going into a holiday weekend. So Monday is a national holiday here in the U.S. It's Memorial Day. So we're on a holiday trade Friday. So you got to be careful today because the market's likely to die out fairly quickly. It is a beautiful day here in Chicago. Not that all trading happens in Chicago. It's a beautiful day here. I expect people to take off fairly early here in the U.S. to start their Memorial Day weekend. A lot of people travel, so expect a dull, a relatively normal morning, and expect the market to go dull fairly quickly, probably around the European close, 11:30 or 12 Eastern. The overnight session traded sideways. We held with high kurtosis, a very balanced profile all the way through. The Asian session, the European session brought in some buying that quickly failed, and then we have sellers in control. We're currently under the point of control, under the IB, under VWAP, all at the same level. This is a crucial area right here at 24.12. The volume is 172,000. Is 172,000, which is a little bit higher than we would consider to be common for this product on the overnight session. So fairly active so far. Today is not options expiration. I see comments here and there about options expiration. It is not options expiration Friday. Unless you're looking at weekly options. Options expiration is the third Friday of the month, and that was the 19th. That was last Friday. So today I'm not expecting any pinning action or anything like that. I expect it to be a fairly normal holiday trade. Now I'm hoping for more than 3.5 points for the first part of the session like we had on the FOMC day. That was terrible. But we're heading into a holiday, so expect to sit on your hands a lot. And so that's where we stand currently. The market looks like it's testing from below a key area in the overnight session. We have some backup above with the prior point of control, the prior close. So for now, I'm looking at a fairly quiet open, carrying the auction forward. I'm looking for a fairly quiet open, and I'm looking for this market to basically trade responsive at the beginning. So I'm looking for an open auction, responsive up to the point of control. I'm looking for some resistance here, as you saw just now, with the point of control, with the mid of the session, and then yesterday's close. And then I'm looking for the market to start to have its first big move down, so the first initiative or the first impulsive move down, and then I expect it to hold steady and basically trade the range for the session. I'm expecting an outside in type of day, outside in trading plan, and nothing that is trending as of right now. So if anything, the market might push towards that unfair high that we put in on the close. This candlestick here is a 15-minute candlestick. You see the nice big wick on there. That's joined with a lot of volume, really strong delta to the sell side. So that volume there was a lot of selling on that volume, and it's unusually high volume. It seems like the buyers, buyers who've taken up this market so far, it seems like they were taking profits yesterday on the close. There was a good amount of selling that occurred. Yesterday's close, cash close, that bar had about 70% or 65% more volume than the 20-day moving average. So there was a fair amount of interaction here on the close yesterday. I expect that wick to be tested, but I don't expect it to be taken out today. So I'm looking to trade from the outside in. I'm looking for moves to any extended move to have its continuation or extension move. Look to fade that move back towards the middle. That's my plan for the day, and that's what Hypo 1 is. Hypo 2 starts us out with compliance on the overnight action, so we're up against resistance, and we start to drift lower, and we start to move to the low of the range. But then again, I'm looking for the market to find a higher low and start rotating up into the point of control, and then hold steady but down in the lower end of the range. That's Hypo 2. Hypo 3 and 4 have to do with a trend down and a trend up. Trend down more likely than trend up at this moment. We still have the gap below us, still standing out there and attracting the potential for an auction. We found our buyers yesterday, and that's what the whole point of this auction up was, to advertise for. We found our sellers to advertise for sellers. As price advertises higher, it's looking to activate sellers, and it looks like we activated sellers in the 24, 16, 17 area twice, and that's likely to hold today into the holiday. Okay, that's all I have for you. I want to remind you again, please hit the like button. It is Like Friday. I'd appreciate it if you did that. Trade conservatively today. And understand that things might be sparse, opportunities might be sparse after 11:30 or 12 Eastern U.S. time. So just make sure you're being conservative so you don't enter into the long weekend with a hole in your pocket and a bad feeling about trading. Okay, that's going to tap into your emotional capital, and you'll come back with less confidence. Good luck today, and I'll catch you on Tuesday. Take care.